Terence? Terence? Terence, can you hear me? Oh, Terence. Ah, Terence, can you hear me? Yeah, now I can. Oh. Okay, let's do it. Oh, okay, all right. Okay. Good morning and welcome to IGTV. I'm Angeline Ong, and what a lovely day it is here in London. It's the 5th of April. Coming up in today's program, the New Zealand dollar jumps after a bigger than expected interest rate hike. Plus, gold prices hover at more than a one-year peak as weak US data prompts investors to rush to safety. And the orange juice rally continues, with Brazil profiting from the crisis in Florida. Now, with 30 minutes to go until the European market open, this is how the pre-market is looking across Europe. Before I show you that, this is a look at the VIX, the volatility index. As you can see here on this channel, the VIX has been coming down steadily as there have been no fresh signs of any sort of banking turmoil. That seems to have eased recently, as you can remember from the VIX spiking where this arrow is. Let's take a look at the futures then. So for FTSE, we're looking at perhaps a broadly lower open. Same story with Germany and also with the France 40. These indices seeing a bit of a calm since the volatility that I mentioned earlier caused by the banking turmoil. But all that seems to have stabilized for now since there have been no other incidents in the last week or 2 weeks. Now, don't forget, much of Europe is also heading into the Easter break, so many traders have already left their desks. Overnight in Asia, trade was thinned by holidays in Hong Kong and China, leaving MSCI's Asia Pacific Index, including Japan, just a smidgen higher, but very close to flat, while Japan's Nikkei is still set for its biggest one-day percentage fall since mid-March. Now, checking in on Wall Street overnight, a 4-day winning streak for Wall Street indices ended. Interest rate expectations being dialed down after data showed that US job openings hit their lowest level in nearly 2 years in February. Let's take a look at what the early charts are showing us for the US. And here is the chart for you. It's looking like a slightly lower open. It must be said we're still a few hours away from the opening bell. And also, it's likely not to be big moves as traders count down to that non-farm payrolls number on Friday. Of course, outside the United States, markets see other central banks staying on course on hikes to tame inflation. However, a Reuters poll of FX strategists have found that most expect that to keep pressure on the dollar this year. Now, one of the stories we're watching, the RBNZ, surprised markets this morning with a 50 basis point hike, taking the official cash rate to 5.25%. That's 5.25%. The market was expecting policymakers to slow the pace to 25 basis points, a hike of 25 basis points. The central bank had indeed signaled half a percentage point increase at its last meeting in February, if you remember. But as the economic outlook deteriorated, economists had thought this was off the cards and forecast a smaller increase instead. For the RBNZ, inflation is still too high and persistent, and employment is beyond its maximum sustainable levels. And the central bank also decided to maintain its tightening pace, even though it acknowledged the level of economic activity over the fourth quarter was lower than anticipated. Having a look at the Kiwi against the dollar here on my chart, as you can see here, we've got a green candle showing a rise there of around 0.5%. Not a huge jump though, still it was a bigger than expected hike. Now turning to Europe, in Germany we have some breaking news. Factory orders rose more than expected, up 4.8% month on month. Economists had expected a 0.3% rise. Taking a look at the euro here to see if there's much of a reaction, not a huge amount, it has to be said there to that data. It's pretty much flat. Now turning to gold, many investors and markets have seen a comeback for gold. We don't quite know how long this comeback is going to be just yet. However, the banking turmoil and also the wobbles that have been seen out of the mixed economic data out of the major economies and the slow reopening in China is causing perhaps many traders to ask if we can see another leg up for gold. Now, let's have a look at gold prices for you. In the previous session, gold prices jumped to the highest level since March 2022. This is after the release of rather weak US economic indicators. One of them, the US JOLTS job openings, fell to the lowest level in nearly 2 years, to 9.9 million in February, below market expectations of 10.4 million, signaling that the labour market might have started to cool. Now, the Fed's aggressive rate hikes has had an effect on inflation, not as fast as it has wanted. And so far, the job market has remained robust. Now, economists agree that February's move below 10 million could signify a more enduring pullback, even though we are still far from the 7 million level of pre-COVID times. Now, after yesterday's job openings data, the market is now, of course, waiting on that key jobs number out on Friday. And ahead of that, we have the ADP survey scheduled at 1:15 p.m. The market anticipates 200,000 jobs created in the US private sector in March, after 242,000 in February. On Thursday, we'll get the weekly jobless claims and March non-farm payrolls, as I mentioned earlier, on Friday. The expectations point to 240,000 jobs created after 311,000 in February. Unemployment is expected to remain at 3.6%, and average hourly earnings to rise by 4.3% year on year. Also, keep an eye out for February trade balance data at 1:30 and the ISM services PMI out a bit later. Now, very little news on the corporate front this morning, but we have a few of note. One stock to watch out for at the open. Lookers, the UK used car dealer, has come out with upbeat full-year numbers this morning. It posted a pre-tax profit of 82.7 million, that's in pounds, on sales of just over 4 billion pounds. And as trading remained strong in the first quarter, it meant that Lookers could raise its pre-tax profit expectations for the current period. Turning to oil now, and oil prices are up after API data showed another fall in crude and gasoline inventories. Crude oil stocks fell by 4.3 million barrels last week, and gasoline inventories down by 4 million barrels after falling the previous week by nearly 6 million barrels. Distillate stocks were down 3.7 million barrels. Let's have a look at WTI, if I may. There we go. We've seen quite a bit of a climb in oil since around the 19th of March. It's gone up to around the 8104 level, but we're still seeing a bit of a tough time breaking through this resistance line here. As you can see, if it does head up above that, then the next resistance point is around 92.71. But as I said, it has tried quite a few times, 5 times as I can see on my chart. This currently here where my cursor is would be the 6th time. If it breaks above that, then we could see the next level at 92.30, around there, 92.20, 92.81 rather. However, things are looking quite precarious on the global economic front. We've seen mixed data out of the US, and the reopening for China has been slow, so the chances of support coming through for oil prices might be a bit few and far in between. Turning to another interesting trade, orange juice. New York orange juice has never been trading so high. Prices rose another 1.5% in the previous session. We know that orange production in Florida, which accounts for around 80% of US production, is expected to fall by 61% from last year at levels not seen since the Great Depression. Now, the United States Department of Agriculture now estimates that production will reach 16 million boxes rather. In 2022, Florida had to face 2 hurricanes, a January freeze, and a disease called citrus greening. This is a bacteria spread by an insect which makes the trees produce a green bitter fruit, which is not suitable for selling. Producers now need to replant, but of course, all this takes time. 3 years is required to get a tree to bear fruit. These trees will not be profitable before 6 to 9 years. Now, the tragedy that hit Florida planters is benefiting another country. Brazil, the world's biggest orange juice exporter, saw shipments rise by 58% in the first 4 months of this season. And that's it for now. Remember, we're looking at quite an interesting open. Futures indicating broadly a slightly lower open for European indices. Ahead of that, we've got some other trades. And of course, we've got the 10:30 charting show. Be sure to tune in for that. Other than that, that's all from me now. Tune in later when I've got a special guest who was from Lipper, UK and Ireland. He'll be on board, Jake Moller, to talk about equity and fixed income fund flows into the next quarter. Until then, I'm Angeline Ong, and this is IGTV.